Is defense the new offense? Well, let's take a look at some data points to try and answer that. Firstly, the sector is now truly a sector. We had a few defense companies in the past, in the last 2 decades. Now, if you look at the list of names that dot the defense landscape, it's a fairly large list, right from an Ashok Leyland all the way to Cochin Shipyard and companies like MTAR or a recently listed Paras Defense. There are a bunch of names out there for investors to choose from. Essentially, there is depth in the sector if institutional money wants to come in. Now, the argument for why defense could be an in thing, the Atmanirbhar Bharat in defense as well is creating a very large market opportunity because India is arguably a large consumer of defense equipment. Defense PSUs have a bit of a moat around themselves because an approval process in a defense scape takes a really long time. The scale of manufacturing that is needed to supply to the Indian Army, Navy and the Air Force by itself is so large that it gives the companies an opportunity to be able to export as well because there is economies of scale. And by the way, this is not a recent phenomenon. Over the last 5 years, as per a DSP mutual fund note, exports have grown at a CAGR of over 35%. Yes, 35% over the last 5 years. So there is some bit of evidence is what I'm trying to say. And the opportunity is large, by the way. Like I was saying, to serve the Indian Army, Navy and the Air Force, the opportunity size, recently, aircrafts and helicopters, it's about 5.8 lakh crores worth of orders. Defense warships, 3.16 lakh crores worth of orders. And missiles, about 1.07 lakh crores worth of orders that have been handed out or will be handed out in the next few months. This is, of course, as per a report by Antique Stock Broking. What about valuations, you would ask? Haven't the stocks run up quite a bit? In some fashion or in some sense, the argument is true. But if you look at the order book to the market cap, which is a ratio that a lot of people refer to, except for, let's say, a Paras Defense, most of the others, the book-to-bill ratio is much, much skewed in favor of the order books. And the companies are talking about large order wins possible in the near term. I'll tell you about that in just a moment. So sticking to valuations, the other ratio that people look at is the revenue to the order book ratio. And in that case, most of the companies are sub 0.5. Well, in some cases, even 0.2 or 0.3. Therefore, the valuations on a EV/EBITDA basis even there, it's not very expensive. But on a lot of other metrics that people choose to use, they are not too expensive. The risks are well known, of course. If it's a large B2G sector and the only one buyer, which is the government, or even in global cases, it will be exporting to a government, or delays in execution that may come up, or a long receivable cycle risk, which in certain cases is not there. But the opportunity size is just very large. And by the way, we spoke to a bunch of defense companies on this very topic, and most of them had to say that the opportunity size looks very strong. Mazagon Dock, for example, revenues FY23 would be to the tune of 7,500 crores. The order book is 42,000 crores, and they believe they stand a fighting chance of getting orders to the tune of 1 lakh crores over the course of the next 1 year. Similarly for Paras Defense, which says that they will likely grow at 50% CAGR for the next 3, 4 or 5 years. Or a Midhani, which is fairly hopeful of strong growth, or some of the others as well, which have in their con calls spoken about fairly hefty growth targets. So the sector has an opportunity. You got to pick and choose carefully, but it's certainly not a space which you can shrug off.